So the grocery business is a nice, stable industry, and Kroger has been a player in the grocery business for a long time. They've been around for about 100 years. So they've really been through a lot of different cycles and have been proven to be one of the best grocery companies in the country. They're going to continue to get bigger, and they're going to get way bigger fairly soon because they're acquiring Albertsons. So we'll see how that goes. Not the first time Kroger's acquired a company. They've been really successful in acquiring other companies and integrating them into their process and the way they do business. My name is Victor. I have an MBA, a lot of business experience, and I like to analyze companies that I consider investing in. And in this case, I'm going to be analyzing Kroger and sharing that information with you. Do me a big favor and like my video and subscribe to my channel. That'd really help me out. Now, let me go over the process that I use to evaluate a company and provide my analysis on Kroger. Over the years, I developed a process that I like to use for evaluating companies, evaluating the stock, making a decision whether I want to buy, hold, or sell a particular stock. It involves 4 questions. First question, do I want to be a part owner in this company? Do I like the industry? Do I like the management team? Are they doing a good job? And is the company performing well? Is debt less than 3 times EBITDA and under control? And I want a discount on the stock. I don't buy a stock just to see it go sideways or to lose money. And the best way to expect a nice appreciation is catching stocks when they're at a discount. Based on the answers to those questions, I buy, hold, or sell a stock. It's easy to get my head around this business because I go to the grocery store quite often and buy food. And frankly, if you want to be healthy, you got to buy healthy food, fresh food, a lot of vegetables, a lot of fruits, and so forth. Now, I've been shopping at a couple of the stores that Kroger produces or operates, Ralph's being the most popular one, for a long time. And I understand that they're a staple in my community. So I understand their business quite well. The industry I like, the reason for it is I have plenty of technology stocks. I have some companies that are smaller tech stocks that are just growing, some pharmaceutical companies, some small pharmaceutical companies. Now, the food business is stable. We're going to need food for the next 100 years, and we're going to need grocery stores for the next 100 years. There's no doubt about it. So if I have an efficient, well-run grocery store in my portfolio, I really like that idea. Here's Ralph's Q1 results, and they showed a nice growth, 3.5% in sales. They are nice and profitable, very good to see, and they have been growing with digital sales, very good to see. So their guidance for 2023, they're going to grow just slightly from 2022 to 2023. They're going to have 1 to 2% growth. But again, the big improvement in the business is that they're growing their cash flows. They expect that their free cash flows are going to be between $2.5 and $2.7 billion, which is an increase from the previous year. The first quarter income statement looks good. The sales, as expected, are relatively flat. This is a grocery store. This isn't NVIDIA that doubled their revenue from one year to the next. But they are operating a very sound profit. They have very good earnings. And they put together a very good earnings per share number that they delivered to the street. They also are reducing the number of shares on the exchange. So they're making every remaining share of stock more valuable for stockholders. And they pay a nice dividend. They raised their dividend in 2023. So that's also a plus. Their balance sheet is in sound condition. They have an increase in cash and temporary cash investments. They increased that by over $1 billion. So that's very good to see. Their debt is under control. It's actually debt is going down slightly. So that's good to see. So debt is under control. And again, shares are being reduced, which is very good. Very good that the company is buying back shares. In the statement of cash flows is where I see a big dramatic change. Just cash from operations just really grew from 2022 to 2023. It actually went up by 160%. So that's great to see. I value companies principally on free cash flow. So that was a really, really good improvement. And they're putting more money into the business, which is good to see. It's not a heavily, capital intensive business, but they have to put more capital back into the business. Overall, they generated very good free cash flow in the first quarter. I believe that Kroger is currently being sold at a 21% discount. And what that means is that each share, I believe, is worth $56.88, but the stock market will sell you shares at $46.93. So it provides a discount of 21%. I value companies on free cash flows and on earnings per share. Let's go over free cash flows first. The company is guiding that in 2023, they're going to have 2.5 billion in free cash flow, or up to 2.7 billion. So maybe be a little better, but I'll start with the more conservative figure in the first year. I'm going to grow those cash flows just conservatively by 4%. And those cash flows will grow first 4 years. And then every year after that, I'm going to grow it at 5%. That establishes a terminal value, which is all cash flows beyond year 4 for the company. They have very sound balance sheet, so I'm just going to discount by 8%. And based on that discount rate and the free cash flows that I expect in the future, my model says that all those cash flows are worth $49.45 billion. I'm going to add the cash that's on the balance sheet, and I'm going to take away debt, which will leave me with an equity value of $38.6 billion. The company has a market cap of $33.6 billion, and therefore it offers up a 15% discount. If we look at the cash flows the company will produce and divide that by the number of shares available. What that means is that each share using the cash flow method is worth $53.86, but the market will sell you shares at $46.93. Earnings per share, the company has a solid earnings per share number of 4.52, providing a good PE number of 16 for this company, and using a 3% growth rate on the company. Following a valuation formula that I provide here, I get to a value per share of $62.93. But market will sell you shares at $46.93. So there's actually about a 34% discount if we look at earnings per share and value the company using that method. I combine the two, and I take more weight in the free cash flow method. I use 2/3 of this number, 1/3 of the earnings per share value number, and I get to 21% discount on Kroger. So let me revisit Kroger and put them through my scorecard. It's a good company to own for me in a good industry. This is one of the stable stocks. It's not going to go up and down a whole lot. It's going to deliver a nice dividend year over year. Real consistent company, very well operated. Debt is well under control, way below 3 times EBITDA. And there's a discount available on the stock. Therefore, I'm going to keep buying shares of Kroger going forward. Kroger's stock has really been volatile for some reason. In 2022, it had a real significant spike, and then it really dropped going into the late October timeframe. It really picked up, but then it dropped again in late 2022. Was kind of flat at the beginning of the year, and then it went up, down, up, down. So it's been a pretty volatile stock. Now, I don't have a big problem with that. I have a value on the company of $56.88. And what I do is I try to buy around these low points. That way, my acquisition price, it gives me a better yield on that dividend. And since this is a stable company, I just feel like, hey, this is one of those stocks. It is just a good, steady stock. They continue to do well. This year, they are producing a 5.5% return. Again, that's not keeping up with the market. They pay a 2.47% dividend. I think a good part of why it's behind or producing such a low return is we've had a correction over the last 3.5 weeks, call it. So the stock price has kind of come down. But I think, as you could see, there's certain periods when this stock really jumps up. And I'm willing to bet that we're going to see that once or twice before the end of 2023. So Kroger's a really interesting company. It's a really stable business, right? The food business. They grow a little bit every year. Yet the stock price for this company, you could see that it's had, ups and downs. It goes up very quickly, it comes down very quickly. And I actually think that's an advantage to the investor. If you can keep an eye on this stock, you can buy at the right moments and then watch your investment go up in value. That's certainly what I try to do with Kroger. I buy on big dips and then hold the stock since it is a very well-run company. It's in a stable industry and it pays that dividend. Please keep in mind, I'm not a financial advisor. I'm not recommending you buy Kroger stock or sell it. I'm just sharing my experience as an investor. I hope you found it interesting. Do me a big favor and like my video and subscribe to my channel. And with that, I'd like to wish you the best of success in 2023.